What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back to another live stream. Hope you're doing well. I am, you can't see it because my, hold on, let me see if I can go full screen for just a second. I have a cat on my lap. This is kind of special. She's chilling. So you might hear from her or see from her, but she is deep in relaxation right now. So I've got a little friend who's helping me out with the live stream. You may, if you're in the Discord, you may have seen my picture of what she was doing right before the stream. I don't know if some people are dog people, some people are cat people, some people are both. But come on, man, come on. This is the camera crew behind the live streams here. She's ready for CPI. I don't know about you guys, but should be interesting. Also, just a quick PSA: we are looking for new show hosts, more live stream contributors here at A1. We want to expand the live stream longer into the day, just to basically have a longer standing network here. If you're interested in potentially being on camera and doing some of that work, it is a paid role, but we do require trading experience and content creation experience for people who are interested in doing that. If you are interested in doing that, send me an email, support@a1trading.com. Shoot me over an email, send me some experience with what you've done, and maybe we can get you in on the live stream action. May we know who the producer is. In all seriousness, it is a guy named James. He does a wonderful job putting together these shows and managing all of our creators. But on the camera crew, like I said, you know, her name is Stella, and she's right here. Look at that. Come on. Come on, man. That's good CPI juju right there. She is the sweetest cat, man. She just sits there and purrs. Anyways, let's take a look at some markets because we've got just a few minutes here to go before the CPI event gets going. CPI, buy or sell? Well, you tell me, because I do not know what the CPI print is going to be. I also don't know exactly how it's going to impact markets. However, if you stick around with me here, what we're going to do is we're going to map out a game plan for CPI. And more importantly than just watching and trying to trade the spike, which is what so many traders try to do. We're not going to do that here. We are going to instead, we're going to make a plan. We're going to discuss CPI, what it means for markets, and then we're going to trade the aftermath. Let's map out a couple scenarios here, starting with gold. If CPI is higher than expected, and we have on the expectations list today, we have core, hold on, let me restart my drawing tool here. For some reason, it's being problematic. Hold on. For CPI today, we have forecasts for, let's see, CPI year over year, 3.8%. Core CPI is expected to be 2.8%. So we'll keep an eye on these figures because if they beat, meaning they are higher than expected, well, I should say beat is tricky here. If CPI comes in higher than expected, that would be arguably a miss. It would be worse for, you know, the state of markets, but it would be certainly worse for gold and for stocks. if you are, so let's map this out. If CPI is higher than expected, right? It's all about expectations. Expectations are for 3.8% inflation today. What happens to markets if you get a high CPI print? Well, for the gold traders out there, that would arguably be a pain factor. It could, if you got a 4.2%, like a high enough reading off center from what markets are expecting, gold could see fresh lows. Like that is very much within the realm of possibility if you get things going here to the negative side on this CPI print. So watch out for that if you get a high print. If you get a low print, I mentioned we're expecting 3.8% is the expectation. If you get a actual data point that is like 3.6, like much cooler than expected, then gold may have fuel to make a push up to 4,060, which is a level that we just completely failed at, right? This was a past level of support, now arguably resistance. And then the question becomes, do you have enough juice there? Are the bulls actually able to take it back? Now, which way do I lean today? I'm pretty neutral. So I know that's not a super exciting thing to say. It doesn't get a lot of clicks or excitement, but I am pretty neutral today and open-minded to either scenario. Couple key levels that I am watching, again, is what I have marked on my screen right now. I think gold looks structurally much healthier if you get a break above, like recapturing this 4,060 level starts to look really attractive. And I think gold looks really weak if you start breaking through these lows. Well, you might say, well, yeah, of course it looks weak or looks strong. You're just saying if it moves up, you're bullish. If it moves down, you're bearish. Kind of. If price is able to fail below, then I think that selling rallies, that's the trade that makes more sense to me, right? I'm not just saying, oh, it's bearish if it breaks, or I'm bearish if it's down, bullish if it's up. It's not what I'm saying. What I'm saying is that if you get a meaningful breakout one way or the other on confirming data, any retracements, in my personal opinion, for my own trading, are opportunities to join the move. Does that make sense? Give me a 1 in the chat if that concept is making sense here. Because again, I've had some people who are like, Nick, you're just saying it could go either direction. And you are correct. I am keeping an open mind. However, I'm mapping out scenarios in which I get enough conviction to place trades with a defined risk. Okay. Yes, we could go either ways. Nobody knows what the CPI print's going to do, right? Nobody knows with certainty. There's going to be a lot of people in the comment section who are like, oh, sell gold, buy gold. Every single day I have all sorts of comments predicting what's going to happen. Nobody ever, gets held accountable from their comments on YouTube. But if you show up each day, I do, right? People constantly, hey, you were right about this, you were wrong about this. I'm doing my system. That's all you can do as a trader. And for me, what I'm looking for is a significant breakout one way or the other on confirming data. A high CPI print probably sends gold lower. A low CPI print probably sends gold higher. Where the trade is for me is a breakout plus a retest that I could potentially tangibly join. Does that make sense? That's kind of what I'm trying to get at here. Iran conflict stuff is back full swing. It seems like we have got higher oil prices again today. Oil up 2.5%. Let's just check that over here as well. Yeah, 2.5%. Look at this. Oil did what we talked about yesterday. We didn't just gap up and kind of fade. We gapped up and moved higher. This looks structurally bullish. Like oil looks very strong from a technical basis, right? You had major resistance here that broke out today. You had major resistance here that broke out today. The bulls are putting in some work here. And I would argue that most likely, we never know with certainty, but most likely pullbacks in oil probably get bought pretty quickly. As long as this conflict is continuing, oil probably, in my personal opinion, has an easier side continuing, an easier chance of moving higher than moving lower. It's always chances, always probabilities, never certainties. Please understand that language is important because you get people all the time who are like, oil has to do this or gold is definitely going to do this. We never know with certainties. This is a probabilities game, not a certainties game. With that said, where is oil at on Edgefinder? Oil's been also pretty neutral. So I'm going to stay sidelined with that for now. But if we keep, depending on how CPI print falls today, we have, just so we know, we do have CPI today, but we also have producer price index tomorrow. So we have, or Thursday, one or the other, but we have a lot of inflation prints coming out, which are going to be monumental for the state of this, rally in stocks that is being challenged right now. I mean, look, you have Nasdaq higher this morning, S&P 500 holding fine. Like, the stock market is staying pretty resilient here. Okay, cat has moved on. Sorry, I had a cat on my lap for people who just joined. She was not budging until just now. Anyways, for stocks, if we're talking about inflation, obviously here, a higher CPI print than expected. Remember, we are expecting 3.8%. If that number comes in starkly higher, the Federal Reserve is going to probably be more likely, in the eyes of the market, to hike rates. Now, if you think that the Fed is not going to hike rates and inflation comes in higher than expected, and it gives you some kind of a dip, then perhaps you look at gold and stocks and you look at that as a fadeable opportunity, meaning you buy that dip. That may be some people's perspective. My opinion on it is that I think yields are telling you everything you need to know, and that is yields are trending higher. The probabilities for Fed hikes are there and they are rising. And again, I don't claim to know, I know that a lot of people are like, no, Kevin Warsh, he's their guy. He's not going to hike rates. The president would be upset. Well, you have to understand, he has to be loyal first to the Fed, because if he's not, they will revolt against him. The Fed is a committee. It's a democratic thing. They have to vote to make policy decisions, right? He can't just blind faith hold rates lower than they should be or cut rates in accordance with what the president wants, because if he does that, Congress and his own committee will be absolutely on him. At the end of the day, the Fed has to, like, structurally, for you to keep your control of the Fed going on, right? For things to go smoothly, you do sort of need to have an open mind to what the data is truly telling you. And if we get higher inflation and trending higher inflation, and the geopolitical conflict is not being put to rest, which clearly it's starting up again, right? That is structurally a inflationary problem. We heard from what's the other guy? The guy who came out yesterday more hawkish than expected. Another Fed committee member. Anyways, I can't think of his name right now. I think it starts with a W, but I'm forgetting. Anyways, the point is, the Fed is probably not going to be cutting interest rates anytime soon, unless the labor market starts to crack and inflation doesn't go out of control. But if we have a situation here where oil is going to rip through highs, like if this happens and Iran and all that stuff continues to be a problem, if we're going back up to the highs, which I wouldn't say is impossible, that is a serious inflation problem. Like today, Waller. Yes, thank you, Alan. Yes, Waller came out. It was a bit more hawkish than expected. Alan made a post for our A1 Trading socials on that, I believe. But yes, that is my concern here. It's like, okay, you can't just go against the rest of your committee. If everyone sees, hey, inflation problems are real, the jobs market's not in a dire situation, that's something to watch. Anyways, guys, we have 1 minute to go before CPI releases. I just want to remind everyone, please don't leave as soon as the number drops. A lot of times people just watch the spike like a bunch of monkeys in a casino and then they leave. Don't go anywhere. After the news actually drops is when things get interesting. That's when we can talk about what this data means, what kinds of trends this potentially generates for us going forward. So stick around with me, and I promise you won't regret it. We'll learn some real important stuff about where inflation currently is. On the screen right now, we have stocks over here. We have Bitcoin, gold, silver, dollar, and oil all on the screen so that you can keep an eye on how everything is moving. And that way you can watch whatever you're most interested in. So dollar index is a little softer going into the print. We'll get CPI here now. We'll see how this impacts and where we are going next. So immediately, dollar is moving lower, gold moving higher, NAS and S&P 500, stocks moving higher. So this is looking like a soft CPI print. Definitely a soft print, at least based on market reactions here. Bitcoin is higher, Dow is higher, S&P higher, NAS higher, gold higher. Dollar is the big loser here. What was the number? Let's see. I don't think my thing updates in real time, but maybe it does. Let's see. Did it? Actual. If I refresh this page. Yeah, look at that. Nasdaq's up 1.4% here. My goodness. Yeah, my number just does not up very quickly on this one for some reason. Let's see. So we had CPI come in, 3.5%. Nice little softer than expected print for consumer price index. The core number, 2.6%. And this is going to certainly help with expectations here. Take a look at this. CPI month over month came in much lighter than expected. Core CPI came in lighter than expected. That is across the board, softer than expected inflation. That is certainly a positive thing in the eyes of markets. I'm talking about risk assets, for example. And look at that, the 10-year yield decisively lower in response to that. You have Bitcoin popping on this a little bit. You have stocks moving higher here. Stocks certainly okay with the idea of a little cooler inflation. Gives us a little bit more time before we may see the Fed potentially hike rates. And hey, if this number keeps going like this, look at that. You can the two-year yield is telling you a story right now, which is boom, rate hikes may be less likely. That's what we're kind of seeing. Not too bad. I just lost $17,000. My friend, what is going on? Please be careful out there. There's too many people who just get whacked by an event like this. If one move like a CPI and the market moves, you know, it is a move, but it's not even a big move, right? So please be careful out there. Yes, that is a big move if you're looking at like lower time frames, but like, look at this. Gold is coming right up to our trend line here. What happens here? This is decision point time. And I have to say, I'm feeling not too shabby about I sold some puts on GDX yesterday. That's going to look decently healthy today. I may be taking a profit quickly on that one. Just a real quick look at GDX. Where are we at with that? GDX, not too shabby there. Nice little pop, almost 4% on the day. We'll take that. S&P 500 up initially. Question is, do we hold those gains? And another kind of thing to think about here, CPI comes in way lighter than expected. That is great news. Now, if you got, for example, another ceasefire announcement that actually stuck or some sort of middle ground, I'm not saying that's very likely. The thing that I'm saying here is that CPI today is looking back on a month where we had ceasefire promises constantly. The next question is, if the conflict does not see stopping anytime soon, then how much should we weigh in on this CPI print? You see what I'm saying? Because what I'm thinking here is that if CPI is cooler for a month in which things had de-escalated, well, that's great for that month, but that month's over. We're now looking at a situation where the conflict seems to be potentially escalating again. So what I'm saying is CPI is looking at a previous month's data point. Oil prices are looking at the here and now, and oil prices are rising again. I think, I don't have a position on oil, but I do think that the risk reward on oil, I think the risk is more to the upside than to the downside. What I mean by that is I think it is just my take, not financial advice, just my opinions. I think there's more risk in shorting oil than being long oil right now. Because I think if you're short oil, like this thing could rip. Like these things move so quickly. If you remember, look how fast it took us no time, like a couple weeks, for oil prices to double, right? They went from like 60 to 120 almost. That's a double up in like a month and a half. So I think that while CPI today is a great reading, that helps us out in the form of cooler inflation. Inflation's been kept at bay thus far. That is good news. I'm not undermining that. What I am drawing a little bit of, let's not get too excited about, is that was during a time where de-escalation was kind of the norm. Now escalation is back on the table. So I do think that this changes the calibration a little bit for rates. Like I think this probably reduces the imminent need for rate hikes. I think this probably waxed the probabilities of a Fed hike in the upcoming meeting. Like I think that's probably completely going to get taken out. But I would still argue that September, October, November, December are open to rate hikes depending on what happens. Because if we see oil, like understand, if oil rips to 95 again, the Fed is going to be put in a position where structurally prices are going to move higher again. You see what I'm saying? Odds were 45% this month as of yesterday. Yeah, that's probably getting worked back now. Well, I mean, it certainly is. Look at the yields market. That tells you everything you need to know. The question is, and we're going to bring Chris Pulver into the conversation here because I'm sure he's got some insights on this too to think about. The question is, can we trust that, okay, yes, the prior month's data was good, but now it feels like that's almost old news given that the price of oil is back on the rise. Like here's June's price action. And I actually, if somebody has the stats in front of them, I am curious too, how much of that CPI report was due to falling energy prices? Because I bet you it's a big chunk of it. Hey, Chris, how's it going, man?
What's up, man? Happy CPI day.
Happy CPI day. Do you hear my dilemma here? Like CPI looking past month, is this something we should get excited about, or should we just keep an eye on the price of oil for next month's data, or I should say July's data?
Well, what I heard you say was exactly what I thought when I saw the reaction. The Fed likely has all of the runway that they need for this month. And again, we have PPI tomorrow, so the producer price index may come in a lot hotter because that's been the hotter running trend. But this is a huge improvement in inflation. I feel like now the Fed's like, okay, so we don't have to put this crazy hike on for September. And I feel like they're getting the free mileage out of being hawkish. I mean, did you see Waller's comments yesterday? I took a screenshot of this. Yes. Waller was blasting the market yesterday with just all sorts of stuff. Core inflation, this, AI, this. We're reading too much in it. I mean, it's like he was all over the headline news.
He was like, let's not make the transitory mistake again.
Correct.
Yeah.
So he's like, transparency is so important, but the reaction function, not the same as forward guidance. And I mean, again, pretty hawkish stuff, but it's like, that's the whole Fed. And you have this task force that this is what Worse said, like 10 times. Task force is going to be out to the end of the year. The task force results are likely coming after the midterms. So the Fed is not going to be reactionary. And I think that, yes, the market's anticipated, possibly one hike. But after a print like this in CPI, I mean, I guess the hard part is because CPI for our headline data is always lagging. Where does oil have to be for all of a sudden CPI to print higher? I mean, I'm looking at Trueflation, and we went from 1.75 back up to 1.93. This isn't really, breaking out one way or the other, but it is a nice improvement from a 4.2 headline to, what it was a 3.6, that was what came out today, right?
3.5.
Yeah, 3.5. So I mean, that's a big jump, but we're still not at 2%, dude. Like we're not even close. It's like it's an improvement, but it's not 2.0. And if the Fed's going to stick to that, then they're still going to talk hawkish. I just think that now this is the improvement they needed to possibly just see that we can just sit tight and let additional data come in. Like the Middle East stuff is probably a thorn in the Fed side right now. I saw overnight, this is from a pretty like bearish outlet. This is like the Kobayashi letter, if that's how you say it. But they're like, Trump officially declared war on Iran and he's getting Congress approval. It's like, are we really doing this right now? Like, this is a 100-day conflict and now it's officially war.
But then that makes me think, are we going to just run it back? Like, are we going to run everything we just did?
We'll taco the crap out of this thing. Like it's been this whole 100 days has been how many tacos?
Like, how do you play it? I think, Chris, that there is a, the boy who cried wolf story going on too with it.
Sure.
In the sense that I don't, I said this a while ago. I was kind of right, kind of wrong. You may remember me ranting about this. Unlike the tariff stuff, which could be pulled away, I made the argument, maybe wrongfully so, that Iran is a piece of the puzzle too. You can't just pull it away. Trump, saying, hey, it's over, in my mind when we first got into this stuff was like, well, that's not up to you by yourself. Like you also have Iran to contend with. And I want to say I'm partially right, partially wrong, because to my shock, apparently you can just say ceasefire and everything is without the other side, without the counterparty response,
without them knowing it.
Yes. So my thought, I guess, was kind of right, kind of wrong in that, because now I also think, like, doubling down on that theory, Iran is still a negotiator at this table. You cannot, like, eventually, I think the market has sort of like dismissed, oh yeah, no, they're going to figure it out, ceasefire, etc. But I don't know that that is a fair conclusion to the matters going on over there. Like, yes, Trump can say whatever he would like. He can claim that, you know, we've won the war is over, they have nothing left, ceasefire. We've heard the kitchen sink being thrown at it. But I actually think that the taco trade, if that's what people would like to call it, is actually getting tired. Like, what I mean by that is that people are like dismissing completely and underpricing the potential risks if something goes wrong, if that makes sense. Right. I think that's what's gone on with oil. People, like, so many escalations, and the market just like looks past it, and now maybe suddenly the market cares again.
Yeah, I think that you know, being short oil after it's already dropped how many percent? It's like being short oil. I mean, look, in this choppy zone when we broke out below 80, being short oil for that little scalp down to the 60s, great trade. Being short now and thinking that this is going to return. I mean, look, here's what I did. I just took this trade and I just took profit on it today. This is oil futures, so I traded CL for this, and I did the structure here. This is a broken wing butterfly. So where I wanted price to be, this is on the 24th, so the expiration is out another 10 days. So when we were down here, this trade for me is risking $200 to make $300, and I have a profit trap. If we're at 78, I can make up to an extra 500. So I have potentially an $800 winner for a $200 risk. Now, I was down about $80 here because I still had time in the trade, and then price came back up. Today, I closed it out for a $40 winner. Now, the reason I'm closing it is because, dude, I don't think that we're doing this in oil. I think we're probably coming right back into this area, and it's going to be noisy again, maybe a higher low, and then maybe a higher high. That's when you and I had this conversation. It's like, well, Nick, we're back up to $90+ oil. What does that mean for CPI? What does that mean for inflation? What does that mean for everything? And it's not just pay at the pump. Like, everything with oil prices, as far as, you know, literally like the like lubrication of the economy. It's like, if you want to build things, oil is expensive. And even at, you know, $60 to $80, if that's going to be our new equilibrium, we're going to see elevated prices compared to where we were the last couple of years.
Right.
So I mean, I just think it's crazy that it's like, I can look at the same like YouTube channel, and this is like a macro guy that I follow, and it's like $40 oil on one of his like thumbnails, and then $200 oil on one of his thumbnails, two totally different talking heads. I'm like, where does this, like, who's right? This is the most like, they're so extreme that it's like, could we just have a reality where it's like, it's boring to say that, hey, oil is going to stay probably between 60 and 80 bucks, but nobody says that. It's like, it's going to 200, it's going to 40 to do what? Get clicks. But it's like, that's not likely going to happen. And I would hate to tilt my portfolio one way or the other to be like, I mean, sure, if you got paid here, dude, you could take this tiny little, like, for every $100, you can maybe make thousands of dollars, but the probability is garbage. Going to $40 is probably garbage.
Yeah.
So that's not the trade I take. It's just,
well, I think like, if you're betting it's going to 40, you're talking like massive economic problems, most likely.
Yeah, for sure.
Like that it doesn't come easily, because there is a bid all the time in a strong economy for you know, oil prices. So I mean, I'm also watching gold here. Gold caught a nice little pop in response to this today. I'm watching gold from a technical perspective, Chris, because we have been so persistently fading rallies in terms of like price action. Like, every little pop gives you another chance to buy it cheaper later, at least in the long term. That's the way I'm looking at it. So I'm curious to see if CPI's data point today, like, here's my hunch. Don't trade off hunches. It's not what I trade off of. I'm just saying it for fun. My hunch is like, rallies probably keep getting faded here. And this is coming from, I actually sold puts on GDX yesterday, so that's looking perfectly fine this morning. But anyways, my quote unquote hunch there, same goes with like stocks, is I think you have a couple things here that are like happening in the back seat here, which is higher oil prices. If those things rip today, like, this CPI feels like old data. That is my one concern. My second concern is, I think the Bank of Japan is in there still selling the heck out of dollars, buying yen, taking advantage of today's cheap or weakness in the dollar. We see that taking place. That's been a narrative here. And the Asian markets are also kind of creepy too. I don't know if you've been keeping an eye on that, Chris, but like the Korean stock market has been a dog here, man. This has been rough.
Well, it's two companies, dude. It's SK Hynix and Samsung. It's two companies that are in the entire, it's the concentration that is way, way beyond ours. I mean, we should be nervous that we have semiconductors, large cap tech, around 40% of the S&P, responsible for like 60+% of our earnings this last quarter. But SK Hynix and Samsung are essentially the exact same charts as the Kospi. So if you look at KOSPI for the Kospi, that's the index. This thing is pulled back. I think it was just over 30%. That poke there's 31%. Now look at that compared to Samsung. Looks almost identical. Look at that compared to Hynix, SK Hynix.
Chris, would you do anything with EWI?
EWI. I'm already, yes and no. No, because I feel like after missing 100% ETF, I'm probably not going to chase it. I do think that this, I mean, if the AI trade is all of a sudden dead, then I wouldn't want to touch this thing at all. But dude, I think that even going back to the lows here, let me see if this, I mean, market's open here in 45 minutes, but I'm curious if I could do like a, 120 by 100 ratio spread. Let me see, actually look at this one. I might price this out for a trade today.
I don't even know. Is that pretty liquid traded?
Probably not. Probably
not. Yeah, I was gonna say.
It'd be more like the emerging market space, but I mean, we do have options. I could go out to the, gosh, I just think we're gonna have so much volatility. I'm gonna go out to Jan 27. So I'll go out to the end of the year, plus like the flows of like December, January, typically like pretty bullish. For the most part, the market likes to finish at highs. Even if the Santa rally is disappointing, we still typically have like the markets near highs in December, January. So this is a possibility. Spread wise, I mean, let's look at like a 120 by 100 here. I might take a stab at this. Now, this is right around the expected move. It's about an 11 delta. All that means is on paper, you have about an 89% chance of profit on this trade. As you can see down here, this POP is probability profit. I can get $1.80 of credit. Okay. Now, I'd be willing to own shares of EWI, knowing that this concentration risk of South Korea is essentially in the fate of two companies. So if SK Hynix and Samsung all of a sudden are just trash, this stock is not going to be fun to trade. But absorbing this into a pullback of, let's say, 48%, I mean, if we still need the Samsungs and the SK Hynixes, and we still need the Microns, and we need all the chips and computing and everything else that goes into this trade, I mean, there's at least some forgiveness there to say, well, I would own the shares at $80, actually lower than that. But from this high down to $80, I could absorb about a 63% pullback before I get into really any trouble on the trade. Technically speaking, a pullback to this 200-day moving average and a bounce, there could be a very strong bid sitting right there, Nick. And so if that is the case, is we're dropping until we hit some support, and it's just lift off and we go to all-time highs again. Dude, this is a wild and crazy ride, but even this was a rally of 73% on an index, like an ETF, right? That's a big move for a country. But then we pulled back 20% of that, 25% of that. Then we had another rally of 92%, and we proceeded to pull back over 25% again. So these are big, big, big swings. But if they're going to be met with all-time highs, it's a maybe to me. It's like, I've not really traded much on the space outside of, like, I have SMH, I have DRAM, I have SOXX, I do have some Micron, I have some Intel. Like I've dabbled in those. That to me, it's like, I know those a little bit better as far as I think there's a bid there. It's U.S. markets versus South Korea seems like a absolute wild card. But I will say,
like a big casino, doesn't it? Like all the leverage.
VT allows me to get some of that love, and then EEM as well. So emerging markets, I mean, I'm getting some love in, like, Southeast Asia. South Korea is giving you some of that gain. You can see here, like, because of South Korea tipping over, now all of a sudden EEM looks a little bit worse, even though it's up on the year. We're up 15.4 year to date, so we're outperforming the S&P. But in a way, it's like I have exposure to EWI, but I don't have the concentration, and it's like I don't necessarily think I want to participate in just that, like, okay, I'm buying 2 major chip stocks in South Korea that either crash and burn or they're the greatest things ever. That seems like it's got to be defined risk, not undefined risk.
So far, we're getting a little bit of a fade following CPI here this morning.
Yep.
This is a 5-minute chart of S&P 500. Big pop on the CPI report. Cooling here a little bit. And again, what we were discussing, oil price catching a bid at the same time, putting a bit of a thorn in the side of this CPI print. Again, I think it's a good print. And I think you were spot on, Chris, with your observation of like, that's going to give the Fed a checkpoint to be like, we have to make no decisions right now.
Correct. Yep.
We can wait. And I think the market will like that. But the market being forward looking and seeing oil up another 3.6, we know how this thing can move. We saw it back in, February, March, etc., where it was like 5% up every day for like 3 weeks. And then what did it do? It chopped the heck out of everybody for a month and a half. So,
right.
yeah, I mean, I think I said it earlier, I'll stick with it. I think the pain trade more likely is being short oil into that kind of move here. And I think that there is, in my opinion, more potential for oil to expand higher than there is for oil to move back lower. We'll see if I'm off on that or not. Of course, geopolitics are inherently very difficult to predict, but I'm kind of more so not trying to predict the headline, but more so going off of positioning. Crowd sentiment was like, yeah, we're oil's crashing down. All things are clear in the Middle East. And I just don't know that is a fair assumption to completely make. So we'll see. Obviously, Iran has something to say about it. It's not just up to the White House what happens there. And I'm very curious with this whole, I think the 20% tax on goods going through the Strait of Hormuz was, proposed by the president. I don't know that was a serious thing. Maybe it was, I don't know. But the point is, there is still a ton of uncertainty with how the Strait of Hormuz is going to look 6 months from now, 12 months from now. And that continues to keep a bid on oil prices and be a quiet kind of doubt thing in the market. Look at this 4-hour, 1-hour chart. These things are getting faded hard after what was somebody pointed out, the best 1 month change on CPI in I don't know how many
since
years.
2020.
Yeah, like that's a really nice.
Yeah, but you can also have, I mean, again, call it. I'd say it's just bad forecasting. I mean, when you're forecasting from a 4.2, it's like, yeah, I mean, you can just say like, well, we expect 4.2, but we have, oil's dropped how much in that 30-day window?
Right, a lot.
15-20%. It's like, I mean, shelter's been in, home prices are coming down, like all these things that have been also leading to sticky inflation. It's like when oil takes a huge drop like that, it's going to reflect in the data. So again, that's an analog that maybe sounds good, but it's like, doesn't mean anything, dude. In this environment, it's like, it just means that, look, the Fed now can just sit back and be like, hey, our hawkishness is possibly enough. But again, go back to the bond market. I know this is probably boring for most traders, but I'm telling you, dude, this is really important to watch this year, because as we come into August, September, that all important decision that the Fed is going to have to make in September. Because look, the July 29th Fed meeting, probably not going to be anything. They're probably not going to do anything. There's going to be a lot of noise. July is typically bullish. We have earnings coming out right now for financials, and it's going to most likely lead to a respectable earnings runway. But going into August, there is no Fed. It's just Jackson Hole and it's summer trading. So we're going to have some illiquid pockets, and September is like typically the worst month of the year. And we have the Fed rate decision in September. Dude, if yields are higher than 4.7 on the 10-year and the 30-year is revisiting 5 and change. I mean, did you see that our potential like debt servicing line item is going to be number 1 in the next like 6 to 12 months at the pace we're at? Like servicing our debt, even with the Fed rate, which is lower than anything else you can get in the world, right? Like our central bank can refinance at like sub 3%, which you can't find anywhere. But the reality is, it becomes the largest line item at like $1.35, $1.4 trillion a year just to service our debt. That is not nothing. And it's like, and I know that it's like, it's a wall of worry, and you can print money indefinitely, but that's a good thing for gold. And that's a good thing for Bitcoin. Even if Bitcoin still has a story to it, those two, I think, could perform very, very well for the second half of the year. While, really all the mania has been sucked out of gold and silver, I think there is a good opportunity to look for a bottoming pattern.
Yeah.
I'm excited for that, which is why, I mean, dude, I commend you for being short gold and getting a nice little profit of that, because it went down. It got a death cross, and it went down. The 50 and the 200-day crossed over just recently. But to me, that is about the time where gold typically rallies back up into this area. So, I mean, if we start putting in some bottoms in here, I could see a near-term rally into this resistance, and then we see if the bears really want to resume this. And you've got that trend line drawn. So, I mean, yeah, I get it. Like there's a reason to look for another short, but at this point, dude, I am accumulation city, and I'm just going to look at building out my trades, waiting patiently. When this thing breaks, bottoms out, this to me is the trade I'm more interested in. It's like, I think the shorts, if you got this symmetry short or this follow through short, great. Because at this point, now I'm looking for a bottoming pattern, and where the base case is that gold, silver, bottoms out, and then Bitcoin might just have a run here. We'll see. But I think there's a lot of Michael Saylor's pain that the market's trying to cause.
Yeah. And Chris, just to clarify too. So first of all, I have never in my content creation, there's 2 times that the hate on my channel, and I don't get that much, to be honest. I'm very thankful. I have a pretty awesome audience overall, but every once in a while, there's like periods of time where I get a lot of pushback. The 2 times, one was actually in last year's sell-off in stocks. I was buying stocks, and I was early, but I think you and I were both talking about this. We're accumulating shares of stocks finally. Like we finally had a dip that was meaningful, and the hate was amazing. Like the people who are like, you're an idiot, like you should not be buying stocks, it makes no sense. Well, I've had recently an interesting experience with the gold shorts, because people love their gold. Me too, by the way. Like I'm part of the crazy crew too. Don't worry, I'm a gold bug long term. But like during that time, I saw the short opportunity, and I took it, and it worked out really well. But the comment section did not like shorting gold. Like that is a very unpopular trade, I'm finding out. But there are times to acknowledge, like, hey, we might have short-term downside. We caught a lot of that move, but I'm kind of in the same camp of like long-term, I'm looking at this, I'm saying gold's down 30% from the highs or close to it. You have national debts that are rising dramatically, higher interest rates. In the short term, yeah, that could push gold lower. But in the long term, if that becomes unsustainable to manage debt, that is long term kind of the story for gold, right? So yeah, I mean, long term GDX, I told you I'm playing that right now. I just sold some puts out of the money on that. That's looking okay today. I sold, I think 68 or 70, 68. I can't remember which strike price, but I sold, 40 days out, sold some cash secured puts on that. So I'm open-minded to wherever gold wants to go. I kind of am neutral in today's analysis on gold for the short term. I'm no longer as bearish as I was. Some of the story has materially improved, like PMIs have been coming in soft. Consumer confidence was soft. That jobs report was very soft. So there are some cases to be made that the macro is signaling we might be, at least for now, in the process of slowly bottoming out in gold. So I don't see like a massive over here, obviously with hindsight, my favorite's a little easier to speak on this, but I thought there was more downside because all of the dollar metrics were just screamingly bullish, like rates higher. And I don't see that same setup here. So I think that the trade is very different when you have everything kind of synergizing on the macro. For me, that's, I'm a big macro guy. So that trade was there. I don't see that being the path of least resistance anymore. So I'm kind of slowly in the same camp of accumulating gold long term, but I have no short term active trades on gold at this moment. And I'm also watching to see, I'm open-minded to, if you get a breakout higher here and perhaps some de-escalation news, gold very well may be bottoming out. It's just, for me, it's really hard to say.
Yeah. And I think also just look at the central banks. If they maintain a bid on gold, which they probably will, and honestly, the stuff I'm reading macro-wise too is we're not that far away from probably, I think this is going to be just a really interesting Fed regime, which is talk hawkish, maybe not have to do anything rate-wise, not go ahead and cut right away either. But what they do with like the balance sheet, how they potentially pass reserves onto major banks instead of the Fed, it might just, I don't know. It almost seems like there's a lot of like sleight of hand going on with this Fed right now, because they're trying to get a lot of like caressing in the market without having to do anything. I mean, the one thing the Fed is great at is they say stuff and then the whole world does things but the Fed doesn't have to do anything until the very end.
That's
Like
right.
when they talk about hiking rates, they're the last central bank to hike rates. When they're talking about cutting rates, they're the last central bank to cut rates. Every other central bank is like, huh, Fed's going to cut, Fed's going to hike, let's do it. And they already jumped to it. And so I think, like, again, like classic Fed, it's like they get what they want by talking. And I get it. It's the largest central bank. It's probably one of the most important central banks in the world. But ultimately, you know, think about this, the paradigm stuff we talked about, like we did our big sessions. I don't know if it was earlier this year when I talked about like paradigm A, B, C, and D. We're still in this like paradigm C, which is like run the economy hot. Trying to do so would be Fed doesn't have to cut to run the economy hot. It would be almost sad to see them want to cut right away. Like if we talk hawkish for 3-4 months, maybe 4, 5, 6 months, and then we pivot to dovishness or we start to cut. I think that looks really, really rough. Considering how hot the stock market could run. You know, we could be talking 8,000 S&P or beyond. And I think you and I'd have that conversation and think like, okay, dude, if this structure breaks, I'm way more potentially bearish in the market after like a capitulation move higher. Yeah. But with a, you know, sleight of hand Fed, it's like they say one thing. I think what they're trying to do is they're trying to get the messaging out right now that it's like, hey, market, stop relying on us. Like, stop looking at us to do everything. Instead, we're going to build these task forces. We're going to take 6 months to build this stuff out and give you our assessments and our diagnosis of what we think our, you know, readings have to be for inflation, readings have to be for the job market. Where's our mandates going to sit? Where's it going to rest and prioritize? That's going to be after all this. So like everything in Iran is still going to be noise. Fed's not really going to do much. Midterm elections, it's going to be noisy. I mean, we're probably going to have some blaming of like how the voting goes. I mean, I think if the Republicans have a big loss in the midterms, it could be, you know, very ugly messaging as far as like how is voter fraud and all this other stuff. I don't know, dude. It's like it just makes me concerned that we still have these tail risks that a lot of traders aren't acknowledging. I mean, at this point, it's like, do you sound smart to be like, I'm short gold? It's like, cool, but gold's down almost 30%. Right. Who cares if you're short gold? It's like to where? You're short to scalp it? Okay, fine. Scalp it all day. But eventually when we bottom in the big picture, we go back up to all-time highs in the next maybe 2 to 5 years. 2 to 5 years. That's my trade.
Little bit of wisdom goes a long way with this too, because it's like the short side, there's a reason why it's called short and long, right? Short is for the short period of time. Like you don't stay there, you don't overstay your welcome. Yep. I've done that too many times in my trading career to overstay what feels like it's working really well. Man, Chris, I mean, in 2022, it felt like shorting stocks was easy money, right? And here you go in 2026, shorting stocks is like the hardest trade in the book. I mean, I guess it depends what you're looking at. But one thing I wanted to ask you about, and then we got to throw the show over. I know you got to go. Have you seen there's a chart floating around right now where SPX implied volatility is way lower than individual stock average implied volatility? Have you seen that chart floating around?
And the Nasdaq volatility, the implied volatility for the Nasdaq is like almost 2 to 3 times higher than the S&P.
And it always is, but recently it's like exploded. That ratio has really widened where you've got some decent premiums out there for selling on individuals, but the index has become a very crowded. And I saw someone speculating the reason for that is all these levered ETFs. They're hedging. There's like offsetting going on. Very interesting times, but that makes me more interested. There's stocks that I like out there. There are bargains, in my opinion. It's not in the AI world personally, but there's stocks out there that I'm watching, and we'll see. Chris, I know you got to run, so I'll let you out of here.
Okay, I just want a quick comment on your dispersion trade. The stocks, I actually got this Jan Van Eck from you know him from like vaneck.com, big ETFs. There's all sorts of ETFs out there. He literally had a chart on what you exactly you said, which is stocks are all over the place. You have dispersion trades of plus or minus 20, 30, 40%. And yes, the indexes are a fraction of that. So Nasdaq volatility is high because of tech, because of AI. You're still seeing some of those like high IV ranks, but the S&P is taking it pretty well in stride. But it's like if the cracks in the Nasdaq, if we start to see pressure on chips and pressure on AI, and that leaks into like the Nasdaq breaks lower, that could drag the S&P down. We'll see, man. I mean, honestly, these like little dips on the day are bought. You know, today it's like, look at today. We ripped up on CPI. We're fading a little bit. We'll see where the day takes us for the rest of the day. So anyway, I'll see you tomorrow, dude.
See you, Chris. Thanks for coming on, man.
Bye.
Guys, up next, we've got Alan Perez taking over the stream. Real quick before Alan, he's jumping in a little bit earlier today, so I'll try and bridge the gap. Let me just double check. Just want to pull up our If you're new to the show and a fan of the show, then consider coming back and seeing us every day. We are always live Monday through Friday. You can always find our schedule on our website, a1trading.com. Anyways, on our schedule, we have Alan coming after this, and then Marco, and then Tiger after that. So good little lineup here for the rest of today's CPI day. Let's see. So gold fading a little bit here. We're looking at intraday stuff. This is the 5-minute candle. SPX fading a little bit as well. Stock market opens up in 25 minutes. So I'm curious. There's also something, does anyone know like what the heck is going on with software stocks versus semis today? Semis are up 4%, and IGV, the ETF that tracks software stocks, down almost 4%. That tells me like what did Claude announce something? Anthropic announce some new update or something? Because that is a wild dispersion in tech right now. You have software down, semis up. I rub my hands together because I personally really like software. But anyways, going to keep an eye on that, because if software stocks keep getting a dip, if the market gets a dip, I'm probably going to buy some software stocks that I like, as I had in the previous cycle back in, when was that? I guess the April move, there was some, well, no, I'm sorry, wrong April. This April move, there were some really nice pickups during that sell-off. So if we get another retest or dip in the stock market, I'm looking at software stocks as a place to potentially build some positions. Okay, so let me just check a couple of charts here before we go. We've got, look at this, gold still rejecting for now this downward trend line. I did mention I have a position on, it's not spot price of gold. I am short puts on GDX. That is a bullish position on gold miners, which has high correlation to gold. So I kind of have a very soft bullish lean on gold right now. So today's pop in gold is going to be perfectly fine. I did take that position yesterday. Let me just pull up, where did I share that trade? Where was that? Under stock and options trades. Yeah, so I sold cash secured puts out like 40 days on GDX. That is going to look pretty decent today. And if we get like 50 or 60% of max profit on that, I'm going to just take profits and call it good on that. Because, you know, if you've been watching, I don't have a lot of faith either direction right now in gold price. And so I've been going to the options market to still be active there. So I can still trade, even if I have a neutral. This is why I love options, by the way. If you have a neutral bias, like I do, you can actually trade the sideways market. You can sell cash secured puts, you can sell covered calls, you can sell strangles if you're doing like, you know, futures contracts or options on futures contracts, right? You can do all sorts of stuff. Anyways, I do think gold has limited downside and limited upside, which is a position. You can have that take. Like I think most likely we're going to chop more so than I think we're going to rip or crash, right? And as an options trader, what's nice here is you can actually trade that. You can trade that back and forth. So yesterday, when we were selling down, I actually sold cash secured puts on a gold miners ETF, which benefits if gold prices go up. So just to look at GDX and reflect on that. So GDX, I sold the 68. Well, what did I sell? Let me clarify that because I just want to know. 68 puts. So I sold the 68 puts on GDX. And so this being up today, nice little pop may give me an opportunity to take some profits on that. But I do think, you know, I don't want to overstay my welcome there either. Like I think gold, I would not be shocked if gold fades lower here today and following this. I mean, for that, keep an eye on the price of crude. Look at this. This thing is not relaxing. It despite CPI, put all that to the side, oil prices are relentless here. And this feels like a re-escalation trade being confirmed, right? You've had a lot of like, oh, things are escalating, et cetera, et cetera. But I don't put a lot of credence to it until you actually get oil price confirming it. Here it goes. It actually looks like it's sort of confirming, yeah, there's stuff going down and it might not be over. So I think oil price is kind of catching up to the headlines at this point, and that's why the price is sort of relentlessly moving higher. So With that said, we'll keep an eye on stocks here today. We're going to throw the show over to Mr. Alan Perez here in just a second. Before I do, if you guys are not currently using Edgefinder and are interested in getting a copy, I see a bunch of people asking for certain things with an Edgefinder. If you don't have a copy, on these streams, I can only go over so many things. Get yourself one. Now's your chance to do so at a huge discount price right now. We're doing our 40% off summer sale. If you scan the QR code on the screen right now, you can be connected to a member of our team who can set you up with a payment plan option for our products if that is something that you're interested in doing. We'll also drop the link in the live stream chat. If that is easier, simply click here to speak directly to our team, or head over to our website. If you want to just explore what our tools are, what they offer, all the different features, what you can do is head over to a1trading.com. Under advanced market screeners, you can scan all sorts of different tutorials, etc., on Edgefinder, on our stock box. These things, like I said, everything is store-wide, 40% off for a limited time. Up next, you've got Alan Perez coming up to take over the stream. Stay tuned. We'll be right back after this quick break. Don't go anywhere. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Happy CPI day. Hope you guys are doing well. Hope you guys are trading safely out there. We had a very cool print come out, which is getting some pressure there in the dollar. In fact, I was looking at this earlier. Currency strength, you had Kiwi dollar up monstrous. I don't know, you had some positioning a little bit softening right before the CPI print. You had Kiwi dollar right there really taking some strength into the picture. They did have a hawkish RBNZ outlook in their most recent meeting, so I'm sure that's adding fuel there. And look at that dollar. So big drop in the dollar, had a little bit of a pullback. It seems like we're continuing that drop now if you just look at relative strength on currencies. So we are, what I'm looking at here for DXY, look at this level of support. We're on this level of support as well as on this trend line here. In my opinion, that if you were to get a break below from a technical perspective, you could see a continuation maybe to 99. Now, the actual kind of follow through in any softness in DXY, I think is a little bit tricky now. Had we not had the war, would have been a little bit more simple, right? Softer CPI, oil prices lower. You probably see that, forward-looking inflation reads are cooler as well. But now you have a flare-up in the Middle East. And so you're having this cool CPI print today, but then you have oil making some advancements, right? So no worries, Nick, no worries. One thing that I was looking at for this CPI print was, okay, is the lower oil prices in June, does that actually translate into inflation getting better? And it seems like it did. So we are seeing that. And because it did translate into oil, or I'm sorry, because it did translate into inflation becoming cooler, what does this mean here? We're getting a pop in oil back up to this 84 handle here. This was support during the war, now potentially resistance. So does it get walked back next month? I don't know. We'll see. We do have PPI on Thursday, I believe, as well. Let me see. US PPI year over year on the 15th. Yep. Or tomorrow. Yeah. PPI tomorrow. So we'll see. That has been running hotter than expected, or higher. And actually, if you look at the core numbers, expected to tick up. Let me show you what I'm looking at here on my other monitor. PPI right here. If you go to PPI, core PPI year over year, previous is at 4.9. It's looking to tick up to 5.2. Now, the regular number, the headline number, is expected to cool down from 6.5 to 6.2. So I'm curious to see what happens. Another thing on the geopolitical front, you do have, this is an actual financial juice kind of thing on the calendar. The U.S. naval blockade on Iran starts at 1500. So crazy to see that as an official economic calendar input. And you do have Fed Wars testifying at the committee today at around 9 o'clock, so about 45 minutes from now. but we'll see. I think he's just testifying against the committee, so nothing much there. Good morning, Rabies. Good morning, Sluggy. Hope you guys are doing fantastic. Max, good morning. All right, so how am I watching this? So I had a game plan. In fact, I had a workshop yesterday, and we basically mapped out what we were going to do in the event of a cooler or hotter CPI. And this is essentially what I came up with, okay? If you were to get USD strength, good morning, Marco. Hope you're doing well, man.
Hello. Finish your thought.
Sure. If we were to get USD strength, and you continue to see stronger oil, stronger yields, and obviously elevated inflation, I would be looking to short euro dollar, short Kiwi dollar, long dollar CAD, and maybe short gold. Now, I wouldn't take all of these at once, right? But I would look for which one presents the best technical opportunity, the best risk to reward, yada, 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 edge finder score, and then make my decision from there. And if we were to get USD weakness, which is weaker oil, weaker yields, cooling inflation, I would be looking to do one of these three things. USD CHF short, which I'm in right now, which is doing well. Pound dollar long and gold long. So let's look at pound dollar long real quick. The risk to reward opportunity is not there, so I'm not going to do that one. Gold long here, we still haven't broken out yet, so I'm not going to participate in that. However, one of the things in this list was I wanted to see weaker yields and cooling inflation. We got that, but we are not seeing weaker oil. So I'm just going to stick with my USD CHF short, and I'm not going to overcommit to any new ideas until you see the full broader outlook kind of cool off. Because if you still see higher prices in oil, then most likely than not, come the next CPI print, it's going to just tick up again, right? If the CPI report and the oil prices and rates are actually sensitive to what's going on in that area, I'm going to hold back on that. So I'm going to stick with my USD CHF short. If dollar index continues to break down lower, you see continued weakness, then good for me. If not, it is what it is. But hey, Marco.
Hello. So big print today, pretty important, came in our favor, but I took my profits on the GU position. So
Okay.
Yeah, if I put it up here, let's click this.
It is reacting to that 200-day. I will say it seems like you're getting,
Yep.
If I go down like fractal to like the 5-minute or whatever, it seems like you're getting somewhat of a fade going on. You're seeing that in Aussie, not really in Euro. You're definitely seeing that in pound dollar. So very interesting to see that as well.
Yeah, my thinking is that although I do believe that the inflation should naturally come down, I think it's best to take some risk off the table and to actually close this position, because this is a pretty good pop to the upside, pretty good opportunity to close this and maybe look to re-enter a bit lower. And it kind of takes care of the risk. What if the strait is actually closed? So what if the blockade is put back? And then basically, if the US puts the blockade in the strait, Iran will blockade the other side. So no ships are passing through. And that is what brought inflation above 4% the last time. So because of that uncertainty, I decided to close it and get out of GU. But I do overall and long term still like the story where the Fed does flip dovish. It's just a matter of maybe waiting it out a bit and seeing if the blockade is actually effective and if Iran puts their blockade. So essentially, if things go back to as they were in, let's say, April and May. I think May was the main month. Was it May when the US blockade started?
I think it was the war started in May. I think it was April. I think some time had passed.
Okay. Yep. So that's my game plan. That's how I'm seeing it. What about you? So do you think we continue with the cooler prints for the CPI, or do you think this is a good opportunity to actually take profit and reassess?
No, I actually love what you did there, because it's not as simple. So, I had this idea and I talked to you about it, about the domino effect. And essentially you had a super, mature dollar trend, right? You're getting into some higher time frame technical levels. And so you had a little bit of overcrowdedness going on. And I was just kind of worried about the fact that if you were to get the domino starting to fall over against the US dollar, right? You had strong growth, strong inflation, strong jobs. And the first domino was that NFP print, and the dollar was very sensitive to that. And so I thought, okay, well, if you continue to see the dominoes falling against the dollar, then obviously short the dollar, easy. However, it's not that easy, right? Markets, unfortunately, are not that easy. So now you are starting to see continued dominoes kind of falling, right? You had the NFP print,
Yep.
and
Yep.
then now you're having this cooler CPI print, but it's not that simple because now you have escalations in the Middle East, you have the
Yep.
blockade, and so it's like, come on, man. Like, I wish I had a cleaner outlook, but that's just what it is. So I actually do like the idea of what you did with pound dollar specifically, as far as taking the profits. You had a good runner and waiting for pullbacks. And if in the events you get a pullback and things start to clear up on the geopolitical front, then you
Yeah,
execute
absolutely.
the trade and continue the way, right? You
Yep.
you took the first leg and then you get in the second leg.
Yep.
So I do like that idea for sure. Yeah, I'm curious to see what happens. You have PPI tomorrow as well, which is has been running hotter than the CPI. So I'm curious to see if it translates into that as well. Yeah, I like what you did there. I'm gonna be watching really truly here to see what the bond market thinks. I'm gonna just revert to that. If you start to see like this upward trend line here in the 2-year yield, if you start to see it kind of break lower, and hopefully, fingers crossed, oil starts to trade lower as well, then maybe there's kind of like the market's putting a put on what's going on in the war, right? Maybe they think that what we're saying or what we're doing, we probably won't, go on with it as far as re-escalating things, because that would really, we have made some progress, obviously, right? If you have lower oil prices and that's translating into lower inflation, that's some progress that you may not want to walk back, right? So maybe, there's a way to kind of pull out of the Middle East or whatever. So I'm going to be looking at bonds to see if they really think that. I'll look at the 2-year, I'll look at the 10-year as well, to see if there's really some follow through. But you know what? Ahead of this CPI print, Marco, I will admit here, what I was wrong about is that the market was starting to tighten up. As in fact, yesterday, you had at one point the odds for rate hikes was at 45% for this month.
Yeah.
So this month, and then you had Waller
as well. Yeah.
Yeah, and then you had Waller being very, very hawkish.
Yeah.
And in fact, you know what? I saw from Wars today. In fact, it wasn't like a breaking news headline, but it was something that he said.
Maybe you can search it up.
Yeah, it was something about dang, it was like a longer message. Let me see. It's one of the first ones. Yeah. It wasn't read. I don't know what he said verbatim too.
Yeah, I'm trying to see as well.
Fed has no tolerance for persistency, elevated inflation. They have no
Although
tolerance
that's not
for that.
true, I would say that's just words, because they have been above the 2% target for 5 years. So do you have tolerance? I think they actually do. So
I think what I got from that is if it were to get out of hand, if you were to continue it seeing trend higher, then maybe they do hike. That's kind of what I got from that.
One thing that I noticed is that all of the Fed members, they like to bark, but when it comes the time to hike, they are usually not that trigger happy, because again, the market definitely hates hikes. So I think they would rather be a little bit late as far as hikes go than too early. And the current rate is already considered restrictive by most people. So yeah, I don't know. We're gonna have to wait and see the Fed event. But the main catalyst is still the Middle East. So I think you mentioned before I joined that in just a couple of hours the blockade will start. So once the blockade starts, we'll see what Iran does. And if Iran puts the blockade on their end, well, it's just back to the previous situation, and back to the situation that led the CPI to rise, as I mentioned, about 4%. So I think that's our next thing, seeing if the blockade is put in place, or maybe Trump does a taco. That would be really good for the markets. So we shall see what actually happens there. And now it's unfortunately all about the Strait, and all of those alternative routes that we talked about, like Dubai trying to bypass the Strait. That's going to take at least a few months to maybe even a few years to get going. It will happen eventually. So Iran will lose the sort of the green card that they have, or kind of the ace in their sleeve, where they control the Strait, because the Strait will no longer matter, because all of the sort of oil will be moving through other ways, canals, stuff like that.
Yeah, that's the hard part, man. I really wish that we had some kind of insight into seeing like what is true, because you have the president saying that essentially Iran's kind of obliterated, right? They really got nothing going on, but they do have,
Yeah.
I guess, some sort of leverage. So if that was true, then this would be over, and vice versa. They're saying the same thing. So it's really, really hard to navigate.
Mm-hmm.
Um, so I'm saying I'm going to be looking personally, Marco, at this level here, 84. This was at previous support in oil
Mm-hmm.
during the conflict. When the conflict's still going on, but I would like to see what happens here. If we tap into this and you start to see some sellers, maybe that looks okay. Maybe the market is truly like pricing in some kind of piece on the horizon. I mean, I
Mm-hmm.
would expect some kind of pullback in this move. This was a true one directional push lower in oil. So
Mm-hmm.
the kind of pullback kind of makes a little bit sense to me.
Mm-hmm. 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 Yeah, I hate trading this market where, I mean, the Middle East stuff, but it's just going to have to be that way for the next month, 2 months, 3 months. We're going to have to wait and see. But so is there any actionable trade ideas that you have right now, or do you just sort of want to be on the sidelines and see how the situation develops as far as the blockades go?
I'm kind of open, honestly, I'm kind of open to the idea that I can continue my positioning with dollar softness. I'll be
Mm-hmm.
honest. I'll be a little bit more biased in that direction. I
Okay.
think
Yeah.
that there's an incentive to uplift the war and get it over with. So if you're starting to see like
Yep.
these data points like NFP kind of tilting lower, inflation tilting lower, we'll see what happens with PPI tomorrow. If you continue to see that theme, then I think that it's wise, or if you approach it with risk defined, that you position yourself that way. That way, in the event that the pressure is on and the war gets taken walk back, then I
Mm-hmm.
would benefit
Mm-hmm.
from that. So that's kind of my thought process now. But if I see oil start to pop aggressively, I'm obviously not going to ignore that as well, and I'm gonna be
Yeah.
okay. Yeah, this is gonna escalate. So that's how I would position it. So I would be looking at some clean technical levels, for example, dollar softness, like the pound. It's pretty
The
strong,
pound is
I will say.
still good. If we
The
get a
pound
better
basket
price,
as a
yeah.
whole is doing well as well. Like if we go to Edge Finder, for anyone that's new to this, the Edge Finder here basically gathers all of the relevant data information that influences an asset's kind of direction from a macro fundamental perspective, as well as sentiment and technicals, and it does it for you. So this CPI report will start to get integrated into the algorithm, and that's going to influence the rating of the pairs. So if we look at the pound, I just type in GBP, you can see here that the pound basket as a whole is pretty bullish, right? You're seeing pound yen
Yep.
bullish, pound Aussie,
Mhm.
pound US dollar, pound Swiss. You have some neutrals in there, and then you have euro pound is getting bearish. So that's really good there. So the Edge Finder is tracking that. So I'm going to start maybe paying more attention to that, similar to how I was paying attention to the Aussie basket early in the year when the Edge Finder was flagging that as well. So that's what I'm going to be looking for. And if anyone wants to, grab a copy of the tool, it is on sale for 45% off, I believe. It has helped me tremendously in my trading. And if you want to, find these little, you could say sleeper positions, sleeper ideas, go ahead and get yourself a copy of the Edge Finder. Swiss franc basket too, I think, is somewhat strong there. It's kind of neutral. Never mind. It has shifted, I will say. But yeah,
Mhm.
a pound basket looks interesting to me, Marco. But how about you? Anything that you're looking for? If we look at the stock side, I know you're getting heavily into stocks. Look at software. Look at IBM pre-market here, down 22%. Are you
Whoa.
looking at software? Is there anything going on? I really don't know what's going on, to be honest with you.
Well,
But it's
the
starting to get hit.
rotation, yeah, kind of the rotation is there. So things were moving at least last week, I believe, out of tech and into some, let's say, other stuff like construction was one thing, healthcare. I think biotech did pretty well in the last 2-3 weeks. I think last week actually. So there is a bit of a rotation happening, but the S&P is staying strong. I would say it is more flat, but it's still staying above the 200. It's staying above the 20 EMA, 20 EMA, which is pretty important. And if you look at the equal weight S&P, you will notice that things are still trickling higher. So I would say equities are doing okay. Could be better. Absolutely could be better. And I'm taking some breakouts here and there on a couple of stocks, but not really being super aggressive with that. And one sleeper position that kind of doesn't really matter as far as the war goes is what's happening with the yen. So as we talked about, let me just put up my screen there. So as we talked about, I'm expecting for the pension funds in Japan to start exiting out of their foreign positions, foreign investments, and going into domestic. So selling US bonds and buying Japanese bonds. And I think this is a super clean idea that is not dependent on the war, because it's just sort of a tool from the government in Japan, a tool to prop up the yen. And it doesn't involve an intervention. It doesn't involve hiking aggressively. So it's kind of the least amount of pain for the best amount of movement in the yen. So I would love, the best fundamental trade, in my opinion, is selling USD JPY. But holding this for a month, 2 months, 3 months would be super expensive. So it doesn't make sense because of the swaps. Just the last time let me show you the last time we saw a rotation. I know I showed you this, but I'm just going to show it to the viewers again. So this was when the Japanese pension funds were told by the government, look, you guys need to sell domestic and you need to buy foreign assets. So the dollar appreciated against the yen massively. And I'm betting that the exact opposite move of this happens this year in the next few weeks to months. So the way to play it would be through Swiss yen, selling Swiss yen, because the swaps would be break even or maybe even positive, depending on your broker. So I'm looking for some entries on Swiss yen. Would love to see a break of this level of support, and then it would be game on to start adding size and selling Swiss yen. The best part about it is that the Middle East doesn't really matter. So this would be a pure play of the Japanese government trying to prop up the yen, and it gives you a lot of alpha without the beta, the correlation to the Middle East, basically. Yeah.
And I would say too, if you actually start to see truly a softer US dollar, and that does bring down dollar yen, I think that would translate into the broader yen basket, like weakening and the yen getting stronger. One thing that I like too, Marco, I didn't think about talking about this, but it's so obvious. I've been looking at it for so long here. Dollar CAD. I like dollar CAD a lot.
Okay.
You had a huge push up higher here. And then you know what? If I want to kind of hedge that USD short exposure, I think dollar CAD is really good, right? I've talked about this before, but medium to long term, I think on a relative basis, I like the US dollar. I think it's when it comes to rate cutting and stuff like that, it'll probably be one of the last ones to do so. A lot of people, Chris Pulver said, when the US or the Fed starts to say that they're going to start cutting rates, they jump the gun and start cutting rates. So on a relative basis, I do think that the US dollar is going to be kind of the higher yielding currency, and that's going to help the flow. And then also too, you just have the Canadian economy, which has been really hurting, right? So I think the fundamental longer term supports this. So I'm very open-minded to any continued USD softness in dollar CAD. That way I can go ahead and buy the dip. We had no pullbacks necessarily on this pair. So from low to high, we were in a straight one directional push up higher. And now we're starting to see a little bit of a dip there. So I would love to, participate and look at maybe USD CAD at that 1.395 or 1.39 level. That would be really, really good. And for the viewer here watching, someone says, what did he say? He asked if we are covering everything. Someone said, I'm new to this. Are we talking stocks or Forex or both? We're talking everything, my man. We're talking stocks, Forex, metals, whatever. Soybeans, whatever you want, put in the chat and we will talk it. But yeah, I like dollar CAD a lot.
So you would try and look at the 1.395 level, let's say, to try and get in.
Yeah, I think so. Like this one at one point, like this was resistance, right? And I'm looking at this from a technical lens here. This was resistance, and then we broke out of this and really kind of didn't pull back. We just continued higher there. So if we were to pull back into this, what was once resistance here, and you have that 200-day moving average kind of creeping up there as well, if it lines up with there and we do start to see price stall and buyers step in there, I think from a longer term perspective, I like dollar CAD to the upside.
I think that's a fine idea. And it would play well with my short-term bearish view on the dollar. So that should give you an opportunity to sort of get in at a better price. And I think long term, like Canadian dollar is not going to do well. The economic data is bad. If you look at the long term trends in the data, they're pretty bad. If you look at the housing prices in Canada, it's falling, and we know that the Canadian economy is highly dependent on the housing. So all of the indicators, long-term indicators at least, are pointing to a more bearish Canada. And I still like the pound as a bullish currency. I think it's massively improving, and I think the political situation is changing, which the market is loving right now. So the pound is catching a bid, or has caught a bid in the last few weeks. So it's just about sorting the weakest and the strongest currencies and then pairing them with each other. I'm still holding the bearish dollar view. So yeah, GBP/USD on the long side, USD CAD on the long side could be fine, but as more of a long-term view, and then buying the yen in any sort of a scenario where the swaps don't eat you alive makes a lot of sense to me.
I'm in the same camp, man. And for everyone there, just to kind of give you an update on my thought process, I am short the dollar, or my viewpoint is more biased leading that direction, but it's a short-term point of view. All I'm asking for is a deeper, more meaningful retracement for me to participate in the dollar long in the longer term. That's all I'm asking for, right? So you have some overcrowdedness happening at this level here. Everyone and their mom was saying the dollar is the play, the dollar is the play. Well, the dollar was a play over here. You know what I'm saying? So we have to. Now you're up here. You're getting some overcrowdedness. You're seeing the dominoes fall a little bit. And all I'm asking for is that if we were to get a break below this structure of this level of support here horizontally, and this upward trend line, then maybe you can see a dip in the dollar. And I would really like to see if we would dip into this 99 handle or somewhere within this area where that 200-day moving average is, where at that point, I would reflip my positioning, go into dollar longs, buy dollar CAD or other kind of pairs, and then I would trade it that way. Also, what I have to think about is maybe we don't get the break, and the dollar story lives on and it continues to be an aggressive trend higher. That's fine too. I accept my wrong thing, trade the other way. But yeah, that's kind of how I'm thinking about it right now.
Yeah. I agree. Anyway, the next big event is that blockade later today. I think we have the war speech, but I think it's going to be a non-event. Like, I don't think he will reveal anything substantial, and I think he would just wait for the actual event. So blockade, will Trump do a taco, or will he actually stick to the game plan? It's gonna be fun. It's gonna be fun.
Yeah, it's funny. It's an actual event. It's an actual event on Financial Juice, Marco.
And it's what, 3 p.m. your time?
Yeah.
Okay,
we'll
so
see.
There's still a few hours to go. Okay, I'm gonna have to wake up during the night and check it out, see what happened.
Check it out, man. Check it out. But I'm going to go ahead and pivot out, guys. Join the free Telegram channel. It is completely free. It is free value. We do chart markups. We do polls every day. We do bonus content. You will love it. You also have a chance, guys. Look at this ad that Nick posted here the other day. You can get a free trip to the World Cup. Literally, free trip to the World Cup. I might have to participate and buy myself a challenge because that would be pretty cool. So go ahead and join that. Free bonus content, free analysis, all that for you guys. Get yourself a copy of the Edge Finder as well. I use the tool. Marco uses the tool. We love it. It helps you with your fundamental analysis. I promise you, it will make your trading better. Please get yourself a copy. It is the lowest price of the year, so this would be the time to get it. But Marco, thank you so much for the lovely conversation, and we will see you tomorrow.
Thank you as well, and we will see each other tomorrow. So let's see the blockade.
All right, man. Take it easy. Bye-bye.
Yep. See you. Goodbye. Okay, let's continue. So, just saw this stock RXO breaking out. So this may be a potential long setup. Let me just see the SPY. SPY is up on the day above the EMAs. It's actually a good sign. Yeah, actually a good sign. So this is a strategy that I'm forward testing. I'm in GH, I'm in Dell. I got stopped out of Dell. Got stopped out of Best Buy. Maybe gonna have to check my broker. And I'm in Crocs. So yeah, a couple of breakouts. I'll see how that turns out. As far as the watch list goes, GU, I decided to exit. If you're in the A1 Trading Discord, this was a signal. So this trade was a traded a trade signal. You just got the notification that I'm out, plus 3.47%. I did take half off, I think at 1.332, something like that. So it's not a full plus 3.47%. Well, depending on your risk management. My game plan is to basically look for a bit of a pullback, a bit of a correction, and then to get in again, because I still like selling the dollar. I still like buying the pound. I think the pound is showing some resilience. What does help a lot is that the edge finder has now flipped to bullish, so that's a good sign. Let's see. GBP USD. Bullish, score of 6. It's really, really good. I just want to get a bit of a better price. And if I'm being honest, there's a lot of uncertainty right now around the Middle East, around the blockade. As I mentioned, if US puts the blockade back, Iran will put up their blockade. So essentially, no one will pass through the strait. That is what led the CPI to go above 4% the last time. So if we look at the US, see, 3.3, 3.8, 4.2. The strait was closed, and then it was open, and then it went back to 3.5, and I think it could naturally fall. If the strait remains open, it could naturally fall to 2 point something, which should enable the Fed to pivot to a more dovish stance, which is bearish for the US dollar. So that's kind of my number one scenario, but there's a lot of uncertainty at the moment, so I want to be a bit more patient. I want to take my profits. I want to wait and see, maybe this week, next week, see what happens. A position that doesn't really matter much about the Middle East would be selling Swiss yen, essentially betting on yen strength. Okay, so betting on yen strength because of the pension funds that should soon pivot to selling foreign assets and buying domestic assets. So the government basically told the Japanese pension funds, you guys need to start selling foreign assets and buying domestic assets. And the government, if you didn't know, so the Japanese government pretty much controls all of the pension funds. This means selling of US bonds, buying of Japanese bonds. It means bonds go up. It means bond yields in Japan go down. It means the yen catches a bid. So the yen should gain value. What I love most about it is that the correlation between the Middle East and the yen should be pretty low. Okay, so yeah, selling Swiss yen after we see a convincing break of this level of support would be high probability, in my opinion. I do want to mention, so let me just bring up my document here. And let me see if we can put up this link. Okay, let's put it. Whoop. Give me just 1 second to set things up. Okay. So essentially, Ola Prime is giving away 2 tickets to the World Cup final in New Jersey, plus a round-trip flight and hotel accommodations for 2. Okay, now the way to enter is you need to purchase any challenge of $5,000 or above using the link in the description of this stream. Okay, every 5K plus account purchase earns more entries. So essentially, larger accounts give you more entries, and you have a better chance to win. Okay, now if you want to sign up for a challenge with Ola Prime, we have a pretty good discount code for you, which is A1 Live. It gets you 35% off any Ola Prime challenge. So A1 Live is 35% off, and with every 5K account or bigger, you get 1 entry into that giveaway. Now, Ola Prime, their Trustpilot is really good. So they have a really, really good score on Trustpilot, 4.5 out of 5, and more than 2.6K reviews. The thing I like most about Ola Prime is that on some account types, they don't have a consistency rule. If you're a swing trader, and if you were with a prop firm that has a consistency rule, you would know what a pain in the butt that is. So Ola Prime doesn't have it. That's why I like it really, really much. So A1 Live, 35% off. My time has run out. I want to thank you guys for watching. You can catch me tomorrow. I'm streaming every day this week. Let's see the blockade. You know, the next big thing. So today, the big thing was the CPI. It came in cooler than expected, which definitely did benefit my positioning. Now it's the blockade. So let's see if Trump keeps his word or if we get a taco. I would love to see a taco because it would really help my positions, but you never know. So in 30 seconds, you have Tyler coming on. I wish you good luck in the markets, and I will see you tomorrow. Goodbye.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look as you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, ladies and gents? Happy Tuesday. Happy CPI day. Not very happy for the States anyway, but happy CPI day. We did have that data come out earlier. 0.3% miss, bearish on the dollar, bullish on the stocks. So we are currently at 55% for both of these. Dollar was at 60, stocks was at 50, and they are now tied. I can't drive 55, ladies and gents. That's where we're at. So pretty well down to neutral on both of these items now. Stocks are trying to get a little more strength, and the dollar, for me personally, has kind of fallen below that Mendoza line. It's a baseball term for being under 200 batting average and on the cusp of losing your spot on the roster. So it's a little too short to ride the roller coaster, in my opinion, for the dollar, not to mention everything else that's kind of been going backwards. And I do believe dollar, just the dollar by itself is now, well, I know it's back to neutral. So let's just go take a quick peek at the currencies. Of course, you guys know on the Edge Finder, you can always isolate just the currencies themselves, especially if you're a futures trader. This is a really good thing to look at, currency futures. But you can see the dollar is all the way back to a 0. So there you go. Mixed data set, and gone are the days of the strong dollar as recently as, 2 weeks ago, right before we started having the bearish PMI data and the ADP and the non-farm payroll. And now we can add CPI to that list. So wasn't a very pretty picture for the dollar. You can see red on the screen for the currency itself. But remember, what's bad for the dollar is good for the stock side of things. So it is good for it, but still pretty well neutral. So ugly picture on the dollar pairs this morning. As always, the dollar quote currency pairs are at the top, pushes up, mean negative data or negative dollar. And then at the bottom, dollar as the base currency, and the Dixie, big old drops. So looks like dollar yen is trying to retrace a little bit as we speak, but everything else pretty well consolidating after that ugly drop. And I saw somebody had posted IBM open on the chat. So I just got to looking at it. This is what you're talking about right over here. So IBM, I know this isn't a stocks channel, but it is interesting to see how big of a drop we just started off with. 23.5%, ladies and gents. That is disgusting. Now, my only thought on this is this going to present some type of buying opportunities? Because for you guys that don't know, we do have the stock box that's available if you do trade stocks, and IBM's given us a +7. So bullish 7 on here when you kind of combine all the financial readings, sentiment, and technical readings. So is that going to present a buying opportunity for IBM? Well, who the hell knows? But that's quite the ugly gap down, swing low. It's getting close to, as we speak, about that 212 area. So I don't know. You know, I don't have stocks on my challenge accounts anymore. We had them on the Ola Prime accounts for a while, but they made some type of mistake. And I know I told you guys about this back when it happened, but we ended up losing access to the stock side of things. So I was a little annoyed by that, but it is what it is. So we'll just have to get a different account so I can get back to trading my stocks and using the stock box. So anyway, that was something of note I thought I would point out, but yeah, it's just an ugly day out there for the time being in the dollar-based pairs. And we did have our cash open 20 minutes ago. So let's just take a quick look at the indices themselves, just the headline indices. And we did have a little bit of looks like a little bit of a gap up on S&P. Same thing on the Nasdaq, and the Dow had a gap down, but quickly retraced that gap. So these assets, I think, are still neutral unless the Dow did make it on there. Did the Dow make it on that list? Because I think it was a +4 beforehand. I don't know if it actually made it on or not. Let's go look. Let's go have a look. Did this thing get updated? Dow. Okay, so still at +4. So it's still off the list, guys, as far as bullish bias on this thing, but just needs one more point. I don't know if CPI, let's see, year over year. Okay, so yeah, it's already given us a bullish box anyway. So yeah, still off the list as we speak. We'll just get rid of the neutrals and go from here. Guys, if you have any specific tickers you'd like me to check out, as always, do let me know, and I'll be happy to go through them. So let me check the chat real quick over here. Gold and silver, of course. We'll go look at that first thing. Guys, keep in mind the U.S. lost one of its senators the other night, Saturday night, which was one of Trump's closest allies. So I'm sure a lot of you, probably most of you, did hear about that come out. But that was a little bit of a sting to quite a few things. He was on the finance committee. He was, I think, the leader of the finance committee. And also kind of champion a few things that President Trump is trying to get passed, like the Save America Act, which he co-sponsored. So it was quite a blow. And it's kind of interesting because they got his sister actually taken over for the remnants of what would have been the rest of his tenure as senator there in South Carolina. So I'm sure a lot of you probably heard that, but it's going to be interesting to see kind of how the fallout from that happens, and if they're going to be able to get some of these things passed that President Trump so badly wants to get passed, chiefly that Save America Act. So I just thought I would throw that out there. As far as gold and silver goes, pretty well neutral as we speak. We were down in the zeros, I do believe, for gold and silver over here on the list. There's gold at a 0, and then I think silver was right there as well. Yeah, silver 0. So that's about as neutral gets. Getting just a little bit of negativity on the trend, a little bit of positivity on sentiment, a little negativity on the data. So, you know, that's just when you have mixed data like that, it's kind of hard to make heads or tails of it. And if we go over here to the technical side of things, we are getting a retracement. We did bounce into, on gold anyway, we did bounce into this 4-hour demand that I was pointing out the other day. And this trade ended up working out just fine, even though gold went back to bearish gold to neutral after it was bearish, because for a while I was looking to short up here in this supply zone confluence, take profits at underneath the demand zone. And look at that. It just wicked in absolutely perfectly, just barely wicked in before getting the current retracement that it's in. So that would have been a very good technical trade, but again, the fundamentals kind of shifted on us. So, but with the data this morning, the CPI data, that was obviously good for gold and silver. You can see the big pop up we had, and it absolutely did not care about my dinky little supply zone, did it? This is why we always say, ladies and gents, anytime data comes out, got to be careful about opening trades right before, during, or even really right after for a while, until everything kind of settles back down. And this is why I avoid trades, because it does not care about my supply zones when that stuff comes out. So old news, I can delete that. And we'll just kind of reevaluate as we get more data. It obviously had a big, ugly spike as a result of the blockade kind of going back on yesterday, rates flying higher, dollar getting more safe haven flows. Remember, and Nick talks about this quite often, guys, but anytime you have rates popping up like we had, if I just go take a look at the 10-year, this thing was popping higher and higher, and just the same as the dollar itself. Okay, when we got that CPI event come out, it didn't like it. Okay, didn't like it. Does not like the inflation change. So pretty well retracing a little bit down to around the 4.57% for your 10-year yields anyway. That's the main one I personally look at. I know there's the 2-year. I guess it just kind of depends on the context you want to read it. But that's kind of the look on that. Oil, obviously, still continuing to push higher because of all the nonsense that we did get with the blockade going back on, all the strikes, the Iran retaliation onto Bahrain, Kuwait, Saudi Arabia. I think there's a couple other countries over there. So it's just not a very pretty picture right now, guys. This is why we said from the outset, the memorandum of understanding was just a nice to have, but it was not the requirement. The requirement was that dry ink on a physical document, which we never got to. So when everybody was all freaking out saying, hey, we got a deal. No, we didn't. We just had a little bit of a temporary understanding that really wasn't even that much of a MOU, to be honest, not when they're continuing to throw lob bombs and strikes, things of that nature. So definitely risk off. Okay, I say all that to say risk off vibe right now. And we just got to be careful. We just got to be careful on this stuff. So anyway, guys, let me know what you got over here. Down, employment hikes. Chairman Warsh. Let's see here. Yep. Yeah, Chair Warsh, when is he speaking? I saw that on here. Yeah, that's coming up. Starts in 3 minutes, actually. So we'll definitely get some readouts from that, and maybe we can share that on the stream tomorrow when he does his little lip flapping session at the semi-annual monetary policy report before the House Financial Services Committee. Oh boy, there's going to be some fireworks in there for that. It's going to be interesting to go watch the videos from this after. But anyway, let's have a look at some of these setups, shall we? As always, guys, let me know if you have anything you'd like me to bump to the top of the list. So CAD yen, which is obviously the most bullish one that we have at the moment, it finally did give us the bullish look on the daily that I was personally wanting to see. So if we go find that CAD yen over here on the daily, the EMAs kind of worked out to the opposite side. If we go over here and add the daily real quick, you can see right here, a new series of higher highs, higher lows. We are technically in a daily supply, though, as we can see right here, this last green candle up before the gap down. And that's currently where we are at. So that's a daily. So I'm going to color that yellow. EMA-wise, though, we're looking fine. Okay, we had the 8 pop above the 21. So we had that cross, or I guess some of you would call that a death cross to the upside. So yeah, it's, it's not the strongest of trends, and it'll be even better if, again, we break and close below that daily. So yes, it's given us the most bullish vibe. I told you guys already, as at minimum, I would want to see it break in this structure here, which we did. We broke it and closed it on a 4-hour time frame. And then when we retraced, we missed the entry I was looking for by like a pipette or two. It just barely missed. So that's going to remain there. But to be quite honest, at this stage, I want to see it first break that supply, the one that we're currently in. And then maybe we can look for a retracement. I think that would be a lot stronger of a signal versus, if price were just to come back down now. I was interested in, and keep this in mind, if I go to a 1 chart view for you guys. So I was interested in this zone because of the fact we closed above this structure, but we had not yet bounced in to the daily. So that's why this retracement right here was looking pretty attractive. That's a change of character after a downtrend, a close above a structure, a down structure, or a swing high, I should say. And we had not yet bounced into the daily. Well, now the picture has changed. Clearly now in the daily. So now that we're in the daily, if we just get a retracement from here, that's not going to be very attractive, because I don't trust a 4-hour demand that just recently bounced into a higher time frame daily supply. So that's why this picture has changed, and that's why I now have to see this green structure over here. So let me just get rid of this. That's why I now personally, with the way I trade structural breaks, changes of character, supply demand breaks, that's why I have to now see a break and close at minimum above the remnants of this supply. Does that make sense? Because by doing that would show that we've got some underlying strength down here. And I had already talked about this zone structure down here not being very strong, in my opinion, just because the volume started to dissipate, or it started to look smaller than the more recent candles. And even this one, to be quite honest, isn't the greatest volume. But what I liked about it was the structural break. So the first change of character after the downtrend, right? So that's why I'm okay with giving this the time of the day, plus the very bullish score we have. CAD is the #1 strongest currency, but again, the yen is right behind it. So we definitely have to keep that on our radar if we're just isolating the fundamentals. Remember, it's second. And then my favorite asset to trade, if we're just looking at strength versus weakness on currencies, still is going to be the pound Aussie, because that's the one that's given us, that's the only Aussie pair that we have where we can take advantage of the weaker data on the Aussie, right? Because everything else was exceeding expectations on the bulk of its reporting. The dollar is now down to the second to last. Is that right? Is that what we just saw? Second to last, yeah. As far as the majors. So again, I don't personally look at the lira, the rand, the yuan for this picture here. But it's now down to neutral. So I'm going to stick with pound Aussie to be my favorite, just like I mentioned yesterday. So let's go have a look at it, shall we? Now we're in, okay. So we are now in the zone, the aggressive zone I told you guys about. Because if we remember, the daily, the higher probability is going to be down here at the daily 4-hour confluence, way down here. And I told you guys yesterday, this is an aggressive approach. But what I really want to see is price kind of start touching or bouncing into the VWAP. So now that we know the daily is up, the 80 MA is above the 21 on the daily. Go back over here. And again, we're now into this top 2-hour demand zone. I didn't really have a higher time frame confluence around it. And because we're slim pickings, that's probably about the best I could come up with right now. Since the Aussie is the only one with a weak currency outside of the neutral dollar. So yeah, I'm still keeping an eye on this because I still have a few other items going for it. It is a bullish impulse move because it broke this recent structure here. We have not yet broken that structure. We came close over here, but we missed it. So this remains the only bullish impulse move. So, for me, I want to possibly look to take advantage of the underlying strength in that move. Because remember, as always, it takes a lot of money to break a structure. It takes a lot of money to break an opposing supply zone, demand zone, swing high, swing low. So that's why I'm interested in giving. Leg out candle did have a yellow candle that was twice bigger than the more recent candles. So 2x. Wasn't quite 3x like I like to see, or 4x. But it was at least 1x. It was 2x. Okay. So I'm just going to continue to sit here and kind of watch this. If I look at this thing on a 1 hour, you can see we're not that far away from VWAP. We've already pierced the 200 on the 1 hour time frame. In fact, if we go to the 2 hour, you can see we're getting close to touching that 200 on the 2 hour. We haven't quite touched it. So all I'm really asking it to do is just drop a little deeper and tag those lines. And then maybe after that point, we look for a bullish candle for a possible break of that candle. So that's what I'm looking at. As always, not financial advice, but it is definitely the spot that I'm going to keep my eyes on for a while. Now, supply zone wise, I got to measure this out too. Am I even? This is my 1 hour supply, right? So that's going to have to be checkpoint number one. You had a base, you had a leg out, you had a gap, you had VSA picking up on both of those candles. That might not be a good picture now that I see that a little closely. So it just depends. It just depends on really how deep this candle goes into the zone itself. Again, I would like to see it tag the VWAP, the anchored VWAP. Now remember, I anchored that VWAP from reset chart. I anchored that VWAP from this swing low back here. And I would like price to remain above or just right at that VWAP by the time it bounces into the zone. So now that the VWAP is in the zone, okay, that's partly why I'm giving this the time of the day. But now I got to measure. I got to be real. I got to be candid with myself. Am I even going to have a reward risk worth shooting for? Well, let's just say this candle closes up in this area. Okay. Taking profits, or at least look at your checkpoint by that 1 hour supply zone, that's 42 pips. What's 42 divided by 2? 42 divided by 2 is 21. There's 21 pips, guys. I'm not even through my demand zone. So now that I do the measurements, is that even worth taking? Because it's not even a 2-to-1 reward risk, right? I prefer trades that pay me. 2-to-1 absolute minimum, but this isn't even giving me a 2-to-1, and I prefer 3-to-1. But this isn't even offering me a 2-to-1 reward risk, because if I'm going to be real with myself, I got to at least take my stop loss a little deeper down, right? So now that I'm seeing this picture a little closer, a little more granular on the 1 hour chart, with all that volumes kicking in, obviously partly as a result from the CPI report we had for the states, probably going to skip this now that it looked a little deeper. Remember, these trades have to pay us. They have to pay us. And I don't know that I want to chance that. Do I want to chance all this volume that kicked in, the volume from the CPI? Probably not. So now that I see that, this becomes my favorite picture now. The true origin of this swing low to the swing high, bottom of the major curve analysis. So hopefully that makes sense. I thought that'd be a good example to kind of dig a little deeper into now that we've had another couple hours of price action that, that showed us this brand new supply. This supply zone didn't exist 2 hours ago when the report came out. So now that I've dug deeper, it's off the table. What we got over here? Let's go look, see what we got. Gold, silver. Yeah, we'll do silver real quick. Sorry about that. I got you gold, but yeah, for both of these, they're basically about the same in my opinion. Daily. Okay, this is our daily gold we just looked at. There's just nothing, guys. It's too neutral over here. It's absolutely too neutral. If you're just looking at trend, this thing's trending downwards. We have a retracement today from the from the bearish CPI data, which as a reciprocal reaction for gold is obviously going to be bullish. So, I just don't see any good supply zones to short this thing in, even if I'm just looking at this on a technical level up here, right? There's a little bit of a zone there. We had the Sunday gap down, but the leg out volume was horrendous. And we've just recently bounced into this demand zone. So that's off. Now, when we go to silver, since you asked about silver, this is just too sideways congestion-y for my taste. Again, the major zone structure is going to be a little higher. This is the one I drew up a few weeks ago from June 22nd. That's the daily 2 hour confluence. Downtrend. Everything's looking good on the trend. Can't deny that. But now we all of a sudden have a hesitation down here since June 24th, where we're basically making equal lows. So double bottoms, triple bottoms, however you want to look at this picture. Not always, but quite often that is kind of the start of a trend reversal, right? So I don't like the picture on this. We'll have to have some help from the data. We obviously do have, what is it, PMI tomorrow, and we have retail sales, I think, after that. Let's go back to this week. Just need some more data. Yeah, Wednesday, PPI. Retail sales on Thursday, although it is showing medium impact on here. Unemployment claims. So we'll see how some of this data treats things. We obviously have the University of Michigan survey coming out on Friday. But even if you have bullish readings on all of this, right, or bearish, I don't think it's really going to affect gold and silver. Gold and silver is just playing the geopolitics game right now, to be quite honest. And then obviously with today's data, it just kind of literally reversed everything from yesterday. So yeah, there's just, I'll just be candid with you. I've got absolutely zero play on gold. I told you that if we had bearish reporting on everything, this week, then maybe it could get us a bullish look on gold, but gold and silver. But again, we're at straight up zeros even after this report. So I just don't like it. 0, 0. A lot of other things out there probably worth looking at a little deeper. So that's why I'm kind of looking up here. So we went through CAD yen. Somebody else put pound dollar. Yeah, pound dollar pullback. Andrea, yeah, let's have a look at that for you. Pound dollar is a bullish 6. If we go look at that daily on the right, as always, we do have the EMA's point north. We did break this supply zone I told you guys about. We had a break, and not necessarily a close, but we did have a break. So that was the spot where I told you we did have a 4-hour. I just personally wasn't very comfortable with fighting this daily. So kind of a similar picture to pound Aussie we just looked at. I think I'm going to personally wait for a deeper retracement to this zone down here. Leg out, volume was looking pretty good. Okay, that's that yellow candle right there. And but it's not like it's a strong uptrend. It's just a peak. It's just a peak above the water of that daily supply. Again, we didn't get a close. So that's kind of that's what's throwing a wrench in it for my taste. So perhaps we get some more, another series of higher highs, higher lows. But yeah, that's about the best I got right now. Break and close. I still have to see that before I have any thoughts about a retracement all the way down there to that demand. So that's about the best I could do on pound dollar. The yen, somebody's asking about the yen over here. So pretty neutral on it as well. There's no arguing against the trend, that's for sure. If we happen to, if things happen to turn back around for the dollar, which it's not looking great right now, again, outside of the geopolitics and the safe haven flows, I'm still keeping an eye on this zone down here. So nothing's changed. Kind of that 1-6 isolate and just the technical side of things for a minute. Then that would at least give us a retracement back to what looks to be a pretty decent zone of demand down here. It's going to be below all this nonsense here. Like we might have had another little bit of yen intervention last Wednesday. I don't know so much about these areas in here, but at this point, it's just basically giving you a little bit of a triangle, is it not? I don't really get as deep into these patterns like a lot of people do, but hey, there's no denying it. It looks like it's trying to squeeze us in right there. If we're just looking at some of these, some of these higher lows, lower highs, it looks like it's trying to coil up. That's a lot of indecision because we go from bouncing into 1986 levels. You get the intervention traders excited to try to short this thing, but yet you have what was a strong dollar for quite a while, been pushing up like crazy because of all the data. The data has since retreated. And now you've got the geopolitics flaring up again. So it's just throwing a wrench in everything. Geopolitical tracker, where are we at over here? Still high risk. Still high risk on the geopolitics. Safe haven flows into the Dixie. Safe haven flows into the dollar. So you got a couple items kind of closing in on each other. You got intervention, and now you've got safe haven flows kind of converging and making a head. And that's the result that we get. Coil in action. At some point, this thing will scream. The question is it going to be intervention, or is it going to be something really terrible happening in the Middle East that hasn't already happened yet? We don't know yet. So we just got to be a little patient on dollar yen. I look at both, Christian. Top setups, favorite chart. But for me, I just want to see the strength because I primarily trade currencies. That's always been my first love. So that's why I personally love, and I'll end it on this because I know I'm out of time. But I love the surprise index because I look if fundamentals are the why to get into a trade, and if we know sentiment, the smart money, dumb money relationship is kind of the confirmation, and technicals are the timing mechanism. Well, the why still remains the data. So for me, I don't like necessarily buying and selling a strong currency. I like to buy a strong currency and sell a weak currency. So that's why I'm personally more interested in that pound Aussie, because that's the only one that's given me that kind of relationship. Now we have the sentiment and we have the technicals to look at, and obviously we can isolate that with the currencies themselves, right? Like I just showed earlier, if you're looking at this over here. But I'm just talking about the fundamentals. That's just kind of where I lead off with things. So again, pound, if you're looking at just the pound, okay, it's a +5. Aussie, which I just mentioned, again, when you add in everything else, is a 2. So the yen is technically the weakest, but again, I don't know. This is probably going to be different for all of us. It just depends on how you see this stuff, right? And with me being so data dependent, I just like to give this chart personally a little more of the benefit of doubt, just isolated by itself. So hopefully I answered that. It's all about the fundamentals for me. And then obviously the confirmation and trend to follow. So ladies and gents, I guess I'm out of time already. Yeah. Have a wonderful day. Tomorrow we will get obviously the PPI data and Bank of Canada rate statements as well. And we'll give you guys some notes on this Kevin Warsh testifying, see if we get any juicy details out of that or just nothing but a bunch of cussing and discussing. So have a wonderful day. Talk to you guys tomorrow. Trade safe out there.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.